You could make millions of dollars a year from day trading. As a matter of fact, I have a friend that makes over $1 million a month from actively trading in the stock market. But the question is, can you shield that money from taxes? And I'm gonna let you know right now, unfortunately, the IRS has some very stringent tax codes when it comes to day traders, active traders, that you must know if you wanna save on taxes. And in fact, not knowing these rules could cost you tens of thousands of dollars in taxes and even potential jail time. So today, I'm gonna be giving you the ins and outs of the IRS tax law when it comes to day traders and short-term investors. So without further ado, let's get into today's episode. What's up, family? What's going on? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs and investors just like you how to live tax-free. Now, you guys have been sending us a lot of messages like, Carter, can you give us a YouTube video to help us understand how the tax code applies to day traders? And I have a lot of high-level friends in the day trading space. Shout out to Terry Ijeoma of Trade and Travel. Shout out to Wall Street Trapper. Shout out to Aristotle Investments. These are my colleagues who trade and teach people how to day trade to make money outside of their W-2 job. The problem is the IRS has some very, very, very stringent rules when it comes to the tax code for day traders. So I really need you all, and I want you all to know so you can be confident in how to apply these tax laws to your trading business. So my name is Carter Cofield, if I didn't say that already. And please hit that like button, hit that subscribe button. If you haven't already subscribed to the channel, our goal is to help you save more in 2024. So, as I mentioned before, unfortunately, the IRS doesn't favor traders. For tax purposes, the IRS doesn't view trading as a real business, and they don't like to allow traders to enjoy some of the favorable tax rules that business owners get. So again, there's a lot of stipulations in place and a lot of caps in place to minimize your tax savings. But there are some strategies that you can implement to your trading business to make sure that you have access to unlimited losses from your trades to take away from ordinary income and unlimited deduction. So today I'm gonna give you all the strategies and the keys you need to succeed in your trading business. All right, so there are two very important tax designations that you need to qualify for if you want to be able to, number one, maximize your tax deductions in your trading business, and then number two, maximize your loss offsetting ability with your trading business. So we'll talk about these two very important statuses that you need to obtain, and then we'll talk about how to obtain them. So the first designation that you want to qualify for is something called trader tax status. Now, qualifying for TTS, trader tax status, means a trader, once you qualify, can use and treat their trading expenses as legitimate tax deductible business expenses, and they will be able to deduct them on their taxes. So they'll be able to deduct expenses like education, startup expenses, software expenses, margin interest, which is big if you're trading on margin, equipment, automated trading bots, marketing data, stock borrowing fees, all the fees associated with your trading business, you will be able to deduct once you achieve trader tax status. But that also means if you do not achieve trader tax status, none of the deductions related to your trading business are going to be tax deductible to you. It kills me when I see people on the internet saying, start a trading business, set up the LLC, and you can start taking write-offs. That is false. That is illegitimate information. You cannot just start saying you're a day trader on the side, set up an LLC, and start writing off your home office, your computer expenses, your internet. That is not gonna work. You are gonna get audited and you are gonna lose that audit, okay? If you want to legitimately take your trading business expenses, you must achieve trader tax status. So now the question is, now that we know that, the question is how do we achieve? There are 4 main tests that you have to pass in order to achieve trader tax status. Number 1 is trade frequency, okay? At minimum, you must average 4 trades per day, 4 days per week. So 16 trades per week, or I think that comes out to about almost 60 a month. So you need to have at least 60 trades, active trades per month. So that's number 1. And number 2 is holding period. So the IRS says that the average holding period must be 31 days or less for you to pass the holding period test. Okay, so you need to be trading at least 60 times per month and holding your trades less than 31 days on average. The third test is time commitment. Spends more than 4 hours per day working in their trading business. What's up, family? If it's one thing that I know is true, is that you can survive without community, but you can't thrive without community. And in order to build true community, you have to get in the right room with the right people. And so we wanted to create that room especially for you. This is why we have Wealth Weekend. This is gonna be a weekend experience where you're gonna get amazing education, amazing experiences, and amazing entertainment all in one weekend, so you can become that first generation millionaire in your family. Because one thing I stand on is generational curses ran in my family until they ran into me. So my question is, are you gonna be that curse breaker for your family? And if you want to, you need to join Wealth Weekend. So click the link below and we'll see you there. And let's get back to the episode. If you have a W-2 job and you're trying to achieve trader tax status, it is not gonna happen. Okay, because it not only needs to spend 4 hours a day, you can't spend any hours doing anything more. Similar to real estate professional status. If you want this trader tax status, it has to be your main business, the main place you spend your time, and the main place you generate revenue. Okay, and test number 4 is account size. You need to keep a daily trading account balance of minimum $15,000. The good news is you now know what you need to qualify for TTS status. The bad news is this eliminates a lot of people, right? So the people that think they're gonna start a trading business and start taking deductions immediately is probably not gonna happen unless you're passing all of these 4 tests once you start your trading business. So if you pass these tests, congratulations, you've achieved trader tax status. There's no documents you need to fill out. There's no tax form you need to fill out, but this is the requirements that you have to have. Pro tip, we recommend creating an S Corp for your trading business, okay? This will allow all of your income and your expenses to be on your 1120S tax return and not your personal return. This will help you avoid audit risk. So why is that important? Because if you're trading, let me tell you what's gonna happen. Your trading gains are gonna be on your Schedule D, right? For interest in investing income. But your expenses are gonna be on Schedule C. So let's say you made $20,000 in your trading business. You're gonna have $20,000 of income on your Schedule D. And let's say you had $10,000 of write-offs. Your write-offs are gonna be on Schedule C. So you're gonna have a Schedule C with 0 income and $10,000 worth of write-offs. If you want to know the quickest, easiest way to get audited is to have a Schedule C with no income and a lot of expenses. So the fact that your income is going to be on a different schedule than your expenses is going to cause a problem. It's a huge red flag for audits. If you instead make your trading business an S Corp, your income goes on your 1120S, your expenses go on your 1120S, and it's a separate tax form than your personal tax return. All right, let's talk about number 2. All right, so the next thing you want to achieve is something called mark to market status. Without mark to market status, the maximum loss you can write off against your ordinary income is $3,000. So if you had $20,000 loss in your trading business, you can only take that $3,000 loss against your other income. The other $17,000 loss needs to get carried forward indefinitely until you're able to take the losses in the future. We don't want to like wait to take losses. We want to take losses in the year that we incur them. So without mark-to-market status, your losses are capped at 3,000. With mark-to-market status, there is no cap on your losses, and your losses not only can be deducted in your trading business, but they can be deducted against any other income that you have. So mark-to-market status is extremely important. So now that we know that, how do you qualify for mark-to-market status? Well, you need to file form 3115 on your tax return the year in advance before you actually want to achieve this mark-to-market status. So if you want to have mark-to-market status in 2025, you need to fill out this form 3115 on your 2024 tax return so that you can achieve mark-to-market status in 2025. So it has to be a year in advance, which is problematic for people because most people don't plan in advance. But that's why you come to this channel. That's why you're here, because you understand the importance of planning in advance. So your CPA or tax strategist should be able to help you fill out that form, but you need to fill out a year in advance. So if it's 2024 and you don't have mark-to-market status, it's too late. It's too late. You have to wait until 2025. Now, what is the overall summary for this? The overall summary is, as a trader, the IRS is going to make you jump through hoops to recognize your write-offs and recognize your losses. With that being said, if you plan on going into trading full-time, do it. I'm not here to dissuade you from doing that. But if you're trying to start a trading business part-time just to save on taxes, it's not going to work, right? Because all the rules we just talked about today, it really needs to be your full-time business in order for you to maximize the deductions and maximize the losses. So you can still start your trading business if you want, but tax deductions are probably not going to be on your side. So if you like this video, guys, please hit that subscribe button and let me know in the comments if you want more videos like this. If you want me to talk about more investing strategies, I am here to give you all exactly what you need. But I need to know first what you need so I can supply that need. Other than that, guys, I'll see you on the next episode. Peace.